So a fractional CFO, and so if anyone doesn't know, a CFO stands for Chief Financial Officer. All large companies have a CFO. It's an executive position that's similar to a CEO, so you can imagine it being very expensive to hire. A fractional CFO works for small and medium-sized businesses on a part-time basis. So they're then able to get those high-level strategic services at a fraction of a cost. Well, I used to be a competitive gymnast, so.
Yes, I think I saw that on your bio.
Yes. So,
yes.
Yeah, I still try and stay active and flexible and nimble. I try.
Yeah.
I'm definitely not where I used to be, but.
Yoga is so good for that, though.
Yes, I love yoga.
Yeah, so do I. Quinton Cordick, what are you doing, my friend? How are you?
Welcome. Excellent. Great to be here as always.
Yes, and yes. Stefanie, spelled with an F.
Yes.
Which I think all Stephanie should be spelled with an F, unless there's a Stephanie that comes in with a P, then I'll say, yeah, I think the P is a better way to spell Stephanie. But, as a kid, though, when you're looking at that name, you're like, why is there a P in there? And then you got to try and explain why the P is silent. But
yes.
It should be the F.
I know. It's definitely more intuitive. Yeah. And I agree. And thanks for noticing, because a lot of people don't, and they spell it wrong. And I'm like, come on.
Yeah, for sure. Well, listen, Stefanie, we got you in the studio today. We're going to talk about a couple different things. First, I want to dive into your background and what it was like leaving the corporate world, because I know how scary that can be. I've been there, and I know a lot of people trying to break through that barrier. It can be difficult, right? I know a lot of people obviously did it as well too during COVID, and things didn't go exactly how they wanted to and may have gone back into the corporate world, right? We'll touch on fractional CFO and the services that you provide, and then we'll dive into the mistakes that you see a lot of investors make. And I think especially too over the last couple of years, right? Yes. It's been a roller coaster of a ride.
Yes, definitely.
Not even just for new investors or probably even your clients, but also experienced investors as well.
Right, yeah. It's been challenging for everyone. So would love to share some points just to help people out and just help people avoid some of those financial pitfalls.
Yeah, for sure. And we're going to work together to do this.
Sounds good.
Awesome. All right. So who's Stefanie, and what's your background, and what was it like leaving the corporate world?
Yeah. So, obviously I'm a wife, I'm a mom. I always like to make sure I put those in first.
Yeah. 2 kids, right?
2 kids, yes. I am also a real estate investor. And yes, I worked in corporate finance for about 10 years or so. It was a huge, big deal to take that leap. And really what really was the changing and the turning point for me was having my kids. Heading back to maternity work after maternity leave, I definitely wasn't the same person as when I left. Motherhood had changed me. The pandemic had changed me. And ultimately, the time freedom that I had on maternity leave changed me. I didn't realize how much flexibility and freedom and just, amount of experiences that you could have in life being off. And so it was really hard to go back. And it was really hard because I no longer felt the connection and the passion to my work. Maybe if I did, I could have, went back and still been okay. But when I went back, I didn't feel that connection and that purpose. And that really bothered me. Especially having kids, you want to be able to show them what life is about, and the fact that you should be doing something that you're passionate about and that you want to contribute to this world, and what is your legacy. And I didn't feel like I was proud to say what I was doing in that moment. Yeah. And so I knew I had to reevaluate that. And so I did have to do some really deep digging into who I am and what do I stand for, and, lots of journaling and vision boards and, all of the things. Yeah. And ultimately I came out with 2 things that really helped me out of that really, really dark place of not knowing where I was going. Was one, being a real estate investor. Yep. I felt like that was a great way for me to feel like I had options, that I was building generational wealth, and that I had multiple income streams to fall back on. So that helped me to, get some confidence. And then the second part was my financial education. I feel like knowing where you are financially is so incredibly important, because if you don't know where you are and you want to go somewhere new, well, how do you know whether you can, right?
Yeah.
And so digging deep into my finances and my financial situation helped me to realize that I was actually way further ahead than I thought I was, and that I did have options and that I could take the leap. And so now I help real estate investors do that exact same thing, right? I help real estate investors get out of the confusion and the overwhelm of their finances and get into clarity so that they can actually make those big decisions in their business.
So that's a lot that I want to dive into.
Yeah,
right? There's a lot
that's
in
a
there.
long story.
Yeah. No, but it's good though. It was a really good story because I think at the end of the day, we're all chasing that same thing, which is time freedom.
Yes.
Right. I think we start off with return on investment or financial freedom, but if you do get there, well, why are you doing it? Is it because you love real estate, or is it because you like bricks and mortar and roofs, or is it because you're looking for that time freedom, which is what you had when you're on maternity leave?
Yes.
And then you went back to working like, I don't even like this job. This job's shit. Right? And that's where I was as well too, right? Like I remember I said to myself, I can't wait until I retire and I'm 65 years old. I'm like, oh my God, what did I just say? Like, I can't wait till I'm 65 years old. What a dumb thing to say at mid 30s, right?
Yeah.
And then what was it like for you then, Q? Like, because you were in the corporate world as well.
Yeah. And you know what it is? It's taking a step back. You're in the rat race, especially when you have a young family, you're just go, wake up, go. So it's having that aha moment where you can step away from everything. And that's what mine was, right? It was go get an MBA and continue this journey in the corporate world, or put destiny into your own hands, right? And I decided to bet on myself and take that path in real estate, right?
Exactly.
So it's definitely out of your comfort zone, all the fear, all that's coming, but you just got to do it.
Yeah.
Right.
So there's two things you said, right? So one was that you were an investor, and the second one was it financial
education, literacy. Yeah.
Yeah. Where did you get that from?
So
because they don't teach it in the schools.
No, they don't. And now I'm like a big advocate for this, and I would love to be more involved with financial literacy, especially for kids. Honestly, I feel so incredibly grateful that I had an amazing upbringing. My dad was an accountant as well, and my mom was in banking. And so financial talks happened all the time, and it was free flowing. It was right in front of me. And so I think that's something that's huge that doesn't happen in every single home.
It doesn't.
And it needs to happen more. Yeah. And so I was there at the table. I was there hearing it. I was there, listening to budgeting and, making decisions on should we go this direction or that direction, and, those choices that you have to make because funds aren't unlimited. How
old were you when some of these conversations were taking place?
From my earliest memory, I remember them occurring. It was just normal. It was all just discussed at the dinner table like everything else.
Yeah.
And that's the piece that later on in life I was like, wow, that was actually very different. And not a lot of people have that. And so one of my first jobs was working in the bank with my mom. And so I did get a lot of financial education right from the start. And that opened up so many opportunities for me and really helped me to realize what was important, what I had to put in place from the beginning and to get a step ahead.
So was your mom like a teller, a financial advisor? What was she doing?
So she was I can't remember the exact position, but she managed all the tellers. So she was a manager of all the tellers, the customer service representatives.
Okay.
And so one of my first jobs was being a teller. And so I was there, learning from the ground up, the banking system, and looking and seeing people's financials and seeing, people managing their money well and not so well. And like I was making all these conclusions, and then I started doing what I thought was best based off of what I saw and what I learned.
What did you see?
Well, obviously some people spent their money frivolously and some people were very smart with it. And so I started to see what I could do with the money that I was making. And I started saving and investing early. Like right when I was able to open an RSP, I was there opening the RSP. Right when you're able to open a TFSA, I was there opening the TFSA. I was investing in stocks, and that's where it began. And there was no stopping me there because I knew that if I did it early, I had that knowledge that if I did it early, I wouldn't have to do it so much later.
Yeah.
And that's where I felt like when I was going to take the leap and I looked back at all that I did, I was like, I'm so happy I did all of this. And I'm so happy I started early because that gave me options.
Yeah. Did you notice, though, when people were coming to the bank, maybe an odd question, that some people where it looked like they had millions of dollars in their bank account
Yeah.
because of the way that they were dressed or the car that they pulled up in,
Yep.
and then they were like, they were broke.
Yeah.
And then people who had the money were like, they would come with like a t-shirt and running shoes they had for like 10 years.
Yes. And so that's exactly, those were the conclusions that I was making, because I would see the person and then I would see behind the curtain.
That's so crazy,
Right?
though, isn't it?
And so I'm a natural analyzer, obviously, because I'm an accountant and I observe everything. I analyze everything. And so I was making all of these conclusions, and I was like, who do I want to be of these people? Right. And so I picked my path. Like, I am definitely more of the more humble person. I wouldn't really share too much about my, what I have. But at the end of the day, I feel like when I do spend, it's spending more on experiences and spending more on, fun and relationships and travel. And that's important to me, less of the items.
Yeah. Well, they say, Jim Rohn says this, is that more money makes you more of who you are as well, too, right?
Oh, okay.
Yeah.
Just
That's
exposes
really cool.
it, brings out what's already there.
Yeah. So the more money just makes you true. So if you've kind of been like, you grew up kind of tight with your money, then you might be a little, you'll be tighter or not as free with it. And if you've always kind of had this, like you've enjoyed life and this, fancy lifestyle, you just more of it.
Yes.
All right.
Oh, you'll see what's really important to people, right? Because that's what comes out when you have the money, is that they go and spend it on what's important to them.
Yeah.
Yeah.
For sure. So then what was it like taking that leap out of the corporate world? Because that's a very scary leap.
It was very scary, especially since obviously I was very used to the stable path and the path you're supposed to go down, right? And now I'm veering off of it.
Yeah. The path that you're supposed to go down. That's essentially
that's
what it
you're
is,
told.
right?
Yeah.
Well designed. Yeah.
Yes, that's what you're told. And, my parents were immigrants. They came to this country and for a better life for me. And, they wanted me to follow the path because they believed that was the way for me to go. So it was a really hard decision, because not only did I feel like I was kind of veering off of what they wanted for me, but I also was like, I worked so hard to get here. How can I just throw it away? But ultimately, it was my kids that I just kept coming back to. I can't show them, me sticking to something that is crushing my soul. Right. I can't show them that. That shouldn't be the example.
And what was your parents' initial reaction when you had that first conversation with them?
We'll get you closer to that mic too.
Honestly, they were hesitant at first, of course. But I'm lucky in that they didn't dismiss it. They didn't put it down. It was more around, the conversation was more around, tell me more. How are you going to do this? Tell me the steps. What are you going to do? What is the service you're going to provide? And so that's the awesome part about them, is like, we have these awesome discussions and everything is open and on the table. And so it was less about like, don't do it, or and more about, well, how are you going to do it? Let's talk the plan. And so that's where it just started to open up my mind, because now I could dream again. I could think, well, what do I want to do? Like, what do I want my legacy to be? What do I want to show my kids that I'm passionate about? And so that's where I started digging deeper into what I love, real estate investing, what I'm passionate about, which is financial education. How can I bring that together to a business? How can I offer that as a service? And that's where I landed upon Fractional CFO services.
Yeah. So that's a great segue into the next part of this conversation then, is what is fractional CFO, and what are the services that you do provide for your clients? And I assume as well too, based on your previous job or the corporate world, you took some of that experience and knowledge that you had and then moved it into what you're doing today.
Exactly.
Yeah. So let's talk about that. And then when did you start doing that as well too?
Sure. So a fractional CFO, and so if anyone doesn't know, a CFO stands for Chief Financial Officer. All large companies have a CFO. It's an executive position that's similar to a CEO, so you can imagine it being very expensive to hire. A fractional CFO works for small and medium-sized businesses on a part-time basis. So they're then able to get those high-level strategic services at a fraction of a cost. So you're essentially bringing high level executive type strategy to your business, but not having the large price tag that comes with it. And so I, like you said, I did exactly that. I took my over 10 years of experience. I worked in financial planning and analytics in the corporate world, and I brought that directly to the real estate investing space. And the reason I did that is because being in the real estate investing space myself, I saw how much real estate investors absolutely hated the finance component of their business.
Yeah, exactly.
The books.
Yeah, which scared me because I was like, these people are holding large assets that need to be managed properly. They're trying to build generational wealth. And if they're not managed properly, well, what do you think is going to happen? They're going to have to let them go. They're going to have to divest them. They're probably going to lose money along the way. And I didn't want to see that happen because I know what it's like building something for the next generation. And like, I want to help people succeed. I want to be in there helping with the finances because it's the area that I love the most. It's the area that I feel like I have strengths in. And that was where I felt I could give back to people. And that felt like my purpose. Like, this is why I'm here.
Okay. So you're an accountant.
Yes.
Okay. Can we go through the different designations?
Sure.
And then how have they changed? Because there's CPA,
Yeah.
What are they all?
So right now, the designation has already merged. So we are all CPAs.
Okay.
But back when I was in schooling, and I feel weird, am I dating myself by saying that? Maybe I'm old to say that now, but
back in my
days, there was actually 3 designations. So there was a CA, a chartered accountant, there was a CGA, which was a chartered general accountant, and then a CMA, which is a certified management accountant. And so I was a CMA.
Is that the highest?
So there was no
they're just different.
They were just all on the same level.
Got it.
But different. Each one would specialize in different areas. So chartered accountants were very much in firms. They specialize a lot more in tax and audit. General accountants, they were kind of a little bit everywhere. You found a lot of them doing like full cycle accounting and bookkeeping. And then CMAs you would find doing more management accounting, more strategy, more analytics, planning. That's kind of how I compartmentalized it.
Yep.
But that being said, once the designation merged, we all became CPAs. And so I think that's confusing to people now because they think CPA and whatever they have in their mind as what an accountant does, they assume all CPAs do. And that's not necessarily the case because it all depends on what area you've chosen to specialize in, what area you have experience in, what area you want to work in. And so I don't work in tax. Obviously, I did tax when I was in school, but my entire work experience, I've done financial planning and analytics. So I don't have as much experience in tax. So I do find people coming to me all the time saying, oh, well, you're a CPA. Can I get some advice on tax? And no, I'm not going to give the advice on tax because it's not my specialty. I'm going to send you to a tax accountant, someone that specializes in tax, because that's where you'll get, the proper advice. Whereas myself, I focus on the financial planning and analytics. And so I will have people say to me that they work with an accountant and they don't help with any planning, and that's frustrating to them. Well, what kind of accountant are you working with? Because if you're working with a tax accountant, they're not going to help you with, the analytics and the planning and, doing a budget and all of that, right?
Right.
So you need to know what services you're looking for and hire the appropriate accountant to help you with that.
And I think that's one of the reasons why I think this could be a really good fit, because instead of now myself and Quinton and Chris and the rest of my team working with a real estate investor, and maybe they've got a portfolio, instead of saying, hey, go send it over to the mortgage team, have you kind of step in and be that middle person to take a look at what is a game plan that we should probably execute based on your goals. And then once you come up with that game plan, then we can say, hey, mortgage team, go ahead and execute this plan because of your background and the knowledge that you bring to the table for that client, right?
Exactly. Yeah. So that is a service that I offer. I call it now the strategic next steps. Because ultimately I feel like the people that come for this type of service, they're stuck. They have a portfolio. They don't know exactly what their next steps are. They don't know exactly what they should do in order to get things in place for, some of the goals that they're trying to achieve. And so I'm able to then take a look at their whole portfolio, take a look at their properties. How are they cash flowing? Are there any improvements that we can make there? And then take a look at their goals and their portfolio, and do they align, right? Because if they don't align, we now need to start making changes. And does that mean selling things off? Does that mean, acquiring more? Does that mean, focusing your portfolio more on cash flow versus appreciation type properties? Like, what is it that we need to do to your portfolio in order to align yourself to where you're hoping to go?
Right. Selling things off. Is that the evil word? Look, I think sometimes you're in that situation, especially where things are today and interest rates going up as high as they have. I think people have been caught up in like, no, if you buy this property, you have to keep it. Yeah, but even if you're drowning, you know what I mean? Like, you have a life jacket on and it's not, it deflates. You're going to just hang on to it if it's at the, you know what I mean?
Yeah.
And so sometimes you have to know when to, what's that, Kenny
trigger.
Rogers? Got to know when to hold them,
Yes.
know when to fold them, right?
Yeah, I do see a lot of that. People think it's almost like failing when they have to sell. And it's not failing if you have something better to put your money towards, right? Like, if this isn't working for you right now and it's just consuming you and your finances and it's causing a lot of stress and anxiety, is it worth it to keep it? What can you do with those funds if you had access to them? Like, what are the options? And that's what I think people need to take a look at, because you might realize there's actually something better out there for you. And so if you don't do the work looking at that and understanding where you're trying to go, then it's harder to pull the trigger.
Yeah. What about you, Q? Like, do you have those type of questions with some of your clients where, like, that difficult conversation of, hey, look, maybe we should sell this particular property?
Yeah, I think you see it where maybe it's time to unload one in the portfolio, right? Balance everything out, right? And again, we use that same phrase, selling is not failing, right? Do this, it's going to take a weight off your shoulders financially and the mental side, right? Just relax you a bit. So look at the overall long-term goals and match everything up, and selling is not failing doing that.
Right. Okay, so somebody's listening to this and they're like, okay, you know what? I think I need some help, or I need some guidance. And I think that's always a difficult thing of coming to that conclusion of like, maybe I can't figure this out on my own. What is kind of that first step, or how does that work if they pick up the phone and call you? And is there like a free consultation? Then they get put into like another call after that? How does that work?
Yeah. So normally when someone reaches out, I always like to have just a quick chat with them to find out where exactly they're at on their investing journey, because it really does depend where they are. I will suggest different solutions. So if you're a beginner real estate investor, maybe you have 1 to 3 properties and you're just kind of getting started, what I do recommend is getting the right tools and systems in place and your financial infrastructure in place in order to manage your finances right from the start, because you want to get those behaviors and those tools in place, and those consistent check-ins with your finances, so that as you scale, you bring those behaviors with you. It's a lot harder. You think that, I have only 1 to 3 properties, but it's not a big deal. I'll figure it out later. Well, it becomes a lot harder to figure it out later if you didn't have that foundation to begin with. So I have a solution for those people. I do have like a downloadable program for them where I go through how to set up your finances. I have tools available, so spreadsheets that I use myself with my clients that they'll have access to. They'll have access to me for support. So I provide unlimited support for an amount of time. And I provide a touch point where they're able to meet with me directly and chat through any issues, any questions, or anything like that. That's to get those beginner real estate investors up and running right from the start. Then, like we talked about, if you want to work on a specific project, I do some project work directly with clients. My main bread and butter, my main services are my actual fractional CFO services, where I am the finance function for somebody's business, and I work with them on an ongoing basis, on a monthly basis. And so I do think that that's probably more geared towards a medium-sized real estate investor, because first, you're probably managing your finances on your own. Maybe you have your stuff in your Excel spreadsheet. You then probably move on to hiring a bookkeeper, once things get a little bit larger and you're not able to manage it in the spreadsheet anymore. And then you're probably going to want to start being a little bit more hands off. And that's where I come in. I am your finance function, and I will help to manage the bookkeeper, oversee what they're doing, give you the financial insights every single month, what's going on in your business. I'll break it all down for you, flag things that look odd or things that you should investigate. I help to plan out your cash flow to make sure, 2-3 months out, are we still good? And then, are you doing any projects? I'll help you put together a budget. Ultimately, I'm your partner, your strategy partner in your finance realm. So,
right. Okay. I like that.
Yeah.
That's good. We should send out an email. Time for a financial checkup. Could you handle it all? Right? Like, is it just you right now, or are you thinking about growing this to have a team?
Yeah, so I do have a couple of people in my back pocket that I use right now. Honestly, the majority of my business is actually coming from the US at this time.
Really?
Yes.
Why do you think that is?
I think that the US business owners are a step ahead. They know what fractional CFO services are. There's no explaining that to them. They find me. They say, I need a fractional CFO. And then the fact that I niche down in real estate investing, that makes me more attractive because they want someone that knows their industry. And so I'm getting a lot of services and interest from that side. So on that side, I am the main fractional CFO, and I also have a team of bookkeepers. So I have a bookkeeper over on the US side. I have a head of bookkeeping, and they have a team underneath them. So I'm able to take on more business because I have both bookkeeping and fractional CFO services offered together. On the Canadian side, I feel like I'm getting more of these project-based services right now because everybody seems like they're in a struggle. They're not exactly sure where they're moving forward. And I think the idea of potentially working with a fractional CFO is a little bit over their head. They don't know what a fractional CFO is.
I think that's a big thing, right?
Yeah.
Because I didn't know what a fractional CFO was either.
Yes. Yeah. Nobody seems to know what it is. Maybe it's just not out there as much in this industry. I almost feel like, am I the first to arrive here?
It feels like you
Yeah.
are. Like, have you heard this
No.
before, Q? Like,
No,
I haven't.
I have not.
Yeah.
No.
And I'm actually glad that you reached out to me. And we had that conversation. I'm like, hey, this is something that we don't have,
Yes.
and I haven't even heard of it. And I think it's a great tool and resource for people who, again, they need that guidance,
Yes.
or they find themselves in trouble of like, hey, what do I need to do? Just that good holistic overview of
Yeah.
their portfolio and also the direction that they should take moving forward.
Exactly. Yeah. So I feel like that's more of what I'm getting over here on the Canadian side. I'm happy to continue to expand on this side, but obviously I'll have to see the business coming in on this side to want to do that.
Right.
Right now, I am expanding more on the US side.
Okay. Now, you're obviously on social media.
Yes.
And I see that you put posts out. Are
Yes.
people now connecting and reaching out to you based on your post and what you say that you provide for them?
Yeah, I mean, people do reach out. I have lots of conversations again about what is a CFO and like, what do you really do? And so it's a lot more education, I would say, that I'm providing right now. Education and, free value of, tips and tricks directly from me. Like I said, I don't think they're fully ready to have a CFO because no one has one. Right. And when you as an investor are building your business, you're talking to your friends, you're talking to your, other entrepreneurs, and you almost mimic your business off of other people, what they're doing. And if they don't have a CFO, why should I have a CFO? So I feel like it's those people that grasp this concept quickly and grab my services are they going to be the ones that are truly going to benefit, obviously. And then it will probably snowball from there.
But what do you think the misconception is? What do you think that it is that they're not seeing or understanding?
That's a really good question. I question it myself sometimes. I think that they're not not sure if they want to fully commit, because I think a lot of the investors that I see, they're not even at their bookkeeping stage yet. They are holding on to all their finances themselves and trying to manage it themselves.
Right. They're in the shoebox stage where they
still
have all their receipts in the shoebox back seat.
Exactly. They're still there. Maybe they have a spreadsheet. Maybe they're updating it regularly. Maybe not. And you're just trying to push them into, you need a bookkeeper, right? I can't get in there until you have a bookkeeper, because everything that I do is out of the accounting system. Your bookkeeper is your foundation, right? We need the transactions in the accounting system. They need to be categorized correctly in order for me to then analyze them. What are the numbers telling us, right? Mm-hmm. I can't do that off of the shoebox, right?
Do you think, though, they think that you're there to maybe potentially replace their accounting? Do you think that's it? Or do you?
So I've had to have these conversations quite a bit. So when I think of a real estate investor's power team, what I think is a bookkeeper, a CFO, and a tax accountant. That is your financial power team. And I don't think that people know that. They think my accountant is my one size fits all. They should do everything. But which accountant does all those things? I haven't met one yet. I know some that do bookkeeping and CFO, or maybe some that do tax and maybe they also have a bookkeeping, but then they don't have the CFO. So I don't think it's a one size fits all. I think you need to have multiple finance support people as part of your power team.
Yeah, look, and Q, you may go through this as well too, but I know, like, on a weekly, monthly basis, I'm sitting down and I'm talking with my wife and we're trying to figure out, like, hey, what should we do this and should we do that? And,
yes.
and I mean, essentially that's what you're there for.
Exactly.
Because I'm not going to reach out to my accountant like every week or every month, right?
Exactly.
Sometimes I do, but, but that's what you're there for. You're almost there to steer. I guess the accountant would be like, okay, this is where we're going. We're going to Australia. And then you're there to make sure that we're going to Australia.
Exactly.
Is that a good analogy?
It is sort of like, depends when you say accountant, are you referring to a tax accountant?
A tax accountant.
Yeah.
So I mean, I have a tax accountant and he sets, like the different businesses up for us, or he'll say, okay, this is the plan that we need to execute, or we're going to do, infinite banking, or we're going, it's now time to incorporate because you've grown your portfolio to this.
Yeah.
Right. But you're below that level. I don't mean that in a negative way, but you know what I mean though? Like you're there underneath that to then make sure that we're on track.
Yeah. So I'm the one that helps you execute.
Got it.
Yeah.
Okay.
So you have the plans, you have the vision as the business owner, you get your tax accountant involved to make sure, hey, if I do this, what are the implications tax-wise? How do I structure this to make sure it's beneficial to me? You have your bookkeeper, behind the scenes, doing the work of getting all the numbers in. And I'm the one that's going to come in and say, okay, well, this is where you are. This is where you want to go. How do we get there now? What do we need to do with your finances in order to make that happen? And let's have that discussion on a regular basis to make sure we don't veer off, right? And I'm going to be checking it with you every week, every month. What does this say? Are we going there? Okay, we're going there. Are we not going there? Oh, what do we need to do again?
Got it. Yeah, we need to stop. We need to get some gas.
Yes.
Right? Okay, hold on a second.
We need to pivot, right?
Yeah, exactly.
We need to pivot. And how are we going to pivot? What do we need to do? What are our options? Mm-hmm. And so for bigger investors, those are really key conversations that need to be had, because there's other professionals or people in your business that need to be involved. You need to get, your marketing team needs to be involved. What do they need to be doing? Your operations team needs to be involved. Well, what do we need to be doing? So like, it's a very robust discussion we're having of, helping you get there and getting all the team members on the same page.
Right.
I'm the strategy person that helps you get there.
And you also just brought up a good point as well too, where now you're also taking a look at all those expenses and saying, hey, you need to pull back on your marketing, or you need to ramp up on your marketing, or like all those other, okay, we need to do more, social media, or we need to do more live events, or we need to bring in that funnel of new clients coming in because, things have shifted or pivoted.
That's exactly the exact conversations that I go through with my client. Like one of my clients is a coaching client for real estate investors. And, she has a conference coming up and we're looking at, you know, the financials behind it and how we're doing and the targets we're trying to hit and, you know, the number of people we want to have there. And we're having those discussions of what do we need to do for marketing in order to hit those numbers? What does the pricing of that ticket need to be in order for us to hit that goal that we have as the bottom line? And, you know, looking at your expenses, are they still in line? Are they veering off? Do we have to cut back in areas? Like, so yeah, very, very robust discussions about how to get you to where you're trying to go.
Yeah. Mm-hmm. Any other questions on this, Q? Because I mean, I think this is brilliant.
This is your in the weeds, right? In the day to day. The tax accountant, okay, here's your tax return. Here's your strategies moving forward. Here's an update on tax law. But this is day to day, quarterly, like, you know, stay on track, right? It's important.
Yeah.
Because people can drift and they don't look at anything, and then they just do their taxes that year, right?
Well, they drift for a whole year.
100%.
That's the thing, and then
Exactly.
those important conversations are coming up in, like, you know, February or March, or oh my God, we got to dump money into RSPs, or oh my God, we got to, and it's always like
it's a big panic.
Yeah, it's always this panic.
Yep.
You know,
and it's easy. A year, you know, the older we get, we know how quick a year goes. You can drift like that.
Yep.
Right?
Yep.
You blink your eyes. I swear I just did my taxes. What do you mean I got to do them again? Right?
Yeah.
But with your system, people are going to be in tune, and taxes will be a breeze.
Right.
Books will be in order. Everything will be
Exactly.
a breeze. Right.
Yeah. All right. So let's move into the last section here. And I think we kind of covered some of this already, but like, what are some of those big mistakes that you see real estate investors making or clients making?
Yeah. So ultimately, the first thing is just getting yourself organized. I think that's the biggest, you know, the biggest issue I see, especially on the Canadian side, is that the accounting systems and the tools and systems that they need to have in place to manage their finances are just not quite there yet. So, you know, getting the right tools, whether that be a spreadsheet, whether that be your accounting software, and then getting a system in place of, you know, money coming in, where is it coming into? Do you have a separate bank account? Do you have, if you have multiple properties, do you need to have a bank account for each property? And then, you know, how are you saving your receipts? Do you have them in a shoebox? Are you putting them into a digital version? Are you using a storage software? And then who is going to be doing it? Who's going to be managing your finances on a monthly basis? And who's going to be staying consistent? Are you going to be checking in every single month to make sure that things came in as you expected? There are no red flags that you need to follow up on or investigate further. That is such crucial information that people miss because they're not staying consistent and they're not looking at their finances.
Well, and I think the big thing is because they want to be real estate investors. They don't want to be, you know, the bookkeeper or
so
the
hire it out.
CFO. And they're like, well, it's going to cost me money.
Yes.
And, you know, and so those are the listen, I know that because those are the conversations that I had in the beginning as well, too. When I hired my first admin, I'm like, I can't afford to hire an admin. Then you look back like, oh my God, I couldn't afford not to have an admin. And so probably I'll say this next year if I bring you on. I'm like, I can't believe I didn't hire a CFO.
I know.
Right?
Yeah.
But we always tell people, even if they're a beginner and it's one property, you're running a business.
Yes.
Right? So you have to bring that mindset to the table.
Exactly.
Right? You have clients that are paying you monthly. That's your customer, right? You're providing housing. It's a business.
Yeah.
Right? Run it like one.
Run it like one. Yeah.
Yeah.
And then just using that financial insight that you get every single month to make those decisions. Because, I would say every month I'm finding something in my clients' books that will save them money every single month. Mm-hmm. Right. And so if you're not looking, your money's just leaving you. It's going somewhere else. Right.
It's so true because, you know, what ends up happening as well, too, is that you sign up for all these monthly services.
That's a big one.
Yeah. Right. And then all of a sudden you're like, oh, my car renewed. Oh, what's all this? And you start taking a look at all these things you signed up, right? For Crave TV, Prime TV, Apple TV, because you want to watch one show.
Yeah.
And then all of a sudden you forget about it, right?
So subscriptions, that is a big one right now that I see a lot of my clients, it gets out of control really fast. Yeah. And so if somebody's not watching it and saying, hey, like this is getting bigger and bigger every month, or just looking at it and saying, what is this? Do you need all these things? Like, let's break out the entire subscription. Let's go through line by line. What is this? What is that? Do you need it? Is it benefiting your business? Are you getting an ROI off of this service? Does it need to be here? Right. And would you do that deep dive on your own? Because if you won't, you need to have someone who will, right?
What do you find is the biggest challenge for people that do their own bookkeeping? Is it letting go?
That is one. The other one is just, again, they don't have the right tools and systems. So maybe they tried to create something on their own, but they're not really capturing everything they should. Getting a proper spreadsheet to really make sure you're capturing all of the income, all of your expenses, and doing like a reconciliation of, did I capture everything? Did I get it all? If you're working in an accounting software, you can do it. You can work in an accounting software, but at the end of the day, it is accounting, right? And so some things do get confusing. And if you're not an accountant, you might not know how to book those properly. I've worked with bookkeepers that are actual bookkeepers that have businesses, and I've found mistakes and they struggle with certain entries. So can you imagine if someone is just not even a bookkeeper, they're just a regular person going in there trying to do entries? I question, do you feel confident if the CRA came for an audit? That's what I would ask that question. Do you feel confident in those numbers? Because if you don't, you got to hire that out. Right.
And especially if you've been doing it for so long, you just then believe that nobody can do it better than you can.
Yeah.
That's always the hard part as well, too, right?
Yeah. And then, like you mentioned, the last piece is just not knowing when to relinquish it. Right. Because you can manage it if you're small, 1 to 3 properties, you're probably managing in a spreadsheet. I would say maybe 3 to 5 properties. Maybe you try and do QuickBooks, or maybe you hire someone to do your bookkeeping. But sort of after that, things really get out of control, and it becomes really hard for you to manage, 5+ properties or more while still doing all the grunt work behind the scenes. Like, you're going to want to be in other areas of your business, focusing on acquisitions, focusing on, managing your business and the people working in your business, not the actual, financial entries.
Yeah, no, for sure. I was going to say something and I just forgot. But no, I definitely think this is an important conversation for people to dive deeper in. Oh, that's what I was going to go. With everything happening now in the real estate market, have you had real estate investors reach out to you? And what issues are you typically seeing right now? It's obviously a cash flow, I would say, is probably number one.
Yeah.
And then number 2, they probably don't want to let go of their properties. The 2 kind of big things there.
Yeah, so definitely cash flow. Everyone's looking for help for, can I improve my situation in any way? So I have lots of discussions around looking at people's cash flow and then trying to help them understand, looking at both income and expenses, because obviously people look at expenses first. How can I cut back? But also, well, where can you make more? Right? There's 2 sides of the equation. So I have lots of conversations around that, trying to improve people's cash flow. The other piece is debt management, because over the last couple years, a lot of people have taken on quite a bit of debt to cover the cash flow. And now that we're, a couple years in of doing that, a lot of people are questioning, well, what's my way out?
Right.
How
because
do I?
When you say take on debt, like the home equity line of credit, credit cards.
Yes.
And so they're taking from Peter to pay Paul.
Yep.
And then
looking back and being like, what are we going to do with Peter?
Right. Yeah.
Yeah. So that's a lot. That comes up quite a bit of what's the exit now? What are the next steps? Should we be consolidating? Should we be selling off a property using equity to pay that debt off? Do we feel like these properties will recover soon? And if so, can I grab cash or cash flow from those properties to start paying down the debt? So looking at those various options of how are we going to get some of that debt cleared, especially if it's like credit card debt, high interest debt. And then, even if it is the HELOC, some people don't want to be holding that much debt. It's a mental thing for some people too. Like, some people are okay to hold on to some debt. Some people are not okay, right? And they have a hard time sleeping at night, right? And that's very valid as well, right?
And I think the big issue as well too is that, you've got this water coming into the boat and you're bailing it out, but the hole in the boat is bigger than the bail bucket.
Yeah.
And so it feels like you're okay. Well, at least we're getting the water out, but the water is actually still rising.
Yes.
But it's going slow, but not fast enough that you think it's an issue.
Right.
Until all of a sudden the boat starts to sink.
Yes.
And that's probably the situation for
a lot of people.
Of people.
Yes.
You know, and so you get so caught up in like, okay, well, we're going to do this, this, and this, and you forget about this, and you know, and it can happen to the most experienced real estate investor and business owner, because they think about it. Like, think of like some of these large corporations, all of a sudden they go bankrupt. Well, how did that happen?
Yeah.
They didn't have a CFO.
Yeah. Well, I wouldn't even like it. That's one thing. Of course we can say that, but I don't like to think that, you know, even I myself am God and I have everything all together.
Yeah.
You know, even the people that have the financial knowledge like myself, like it has been a struggle to manage some of the properties. Right.
Mm-hmm.
And I think it's important to take away, you know, those learning experiences for the next one. And so one of the things, or two of the things that I can think of off the top of my head of what I'll be doing is, one, bigger reserves. I don't think I put aside enough. Now that I think about it, right? I want to be having more reserves on the side, you know, for vacancy, for capital improvements, for you know, emergencies. Like you could create all sorts of types of reserves to help protect yourself. And just having, you know, a plan in place of if something were to happen, where can I access funds from, right? You want to make sure you're doing that, and then learning to pivot faster.
Yes.
That's another one that I want to be better at, because I think a lot of people did hang on. They did hang on being like, okay, it's going to be okay. It's going to be short-lived. And then here we are, you know, a couple years down the road, and we're still here.
Right.
And so you question, well, if I pivoted faster, did something faster, would I have been in a better financial situation, right?
Yeah.
So some things that I'm reflecting upon.
Hindsight's always 20/20.
Yes.
That's the problem, right? When you look back, it's like, I should have done this and I should have done that. And maybe I should have locked in, and maybe 1.5% or 2% was good at a fixed rate.
Yes.
you know, but it's a hard thing, right? Because you're like, well, these rates are going to stay low. And then also too, the messaging was very different as well back then. It was like, don't worry, rates are going to stay low for a very long time. Go out there and spend money. And I think a lot of times, well, not a lot of times, but people just believe that messaging.
Yes.
They just believed it because government doesn't lie and the Bank of Canada doesn't lie.
Oh,
why would they lie to us?
Yeah.
And unfortunately, you know, people got caught. And then I was talking about this the other day as well, too, is that when they said that it was transitory, I believe that they knew that it wasn't transitory.
Yeah.
But they had to say that it was transitory because you had to flush all that money out of the system. Because if people now started locking in, you would still have all this money that people had access to, because now they all had like, say, lower rates. And inflation would probably be even hotter. That's my theory.
I mean, it's valid, but I think the next time around I will do what's best for me. Right. I think, like you said, a lot of people listened to what was happening outside. And I wish I listened more to myself.
Your gut.
My gut.
Yeah.
My own intuition, and what I specifically could afford and what my specific goals were. Right. And so I think that's what I'm taking out of this experience. Like, of course, these things are cyclical, and we probably will be in another one of these in our lifetime. And so how can I be better the next time around?
For sure. We will.
Yeah.
Right. This happened back in the late 80s, early 90s, right?
Right.
That happened before. But, you know, we've got short-term memory. That's the problem.
Yeah.
That's humans. And it'll happen
Maybe we
again.
should document it.
Yeah.
This is how I felt.
Exactly.
This is what happened.
Yeah.
Yeah.
Anything else that you want to touch on before we wrap it up?
Not really. I think we covered quite a bit. I would love to just, help more people over here on the Canadian side. That's why I started my business to begin with. I wanted to help people here at home. I think it will come. And I think that the more I talk about CFO services and the more I talk about, financial literacy and financial education, the more people are going to realize how important it is. So thanks for having me, because this is, an opportunity for me to speak about what I'm truly passionate about.
Yeah,
And I appreciate that.
You're welcome. And you know what? I've sent a couple clients over to you already.
Yes, thank you.
And I've touched on it on one of our morning meetings as well too. That you're going to be a part of our power team.
Awesome.
And to educate our investors on, this is a great service. Use it.
Yes.
Right.
Yeah.
So thank you very much. If anybody wants to learn more about you or contact you and and use your services, how can they do that?
So like you said, I'm on Instagram. My handle is @reifinance.ca, and then my website is www.reifinance.ca. And yeah, that's the best way to get a hold of me.
Awesome. Stefanie with an F. Thank you very much. I appreciate your time. Quinton
Cordick.
Cordick.
Yes, sir. Last little words. If you see or feel you have a hole in your boat, reach out early. Don't wait till the water's flooding in.
Yes.
We'll get you connected with Stefanie. I think people might be embarrassed or have a feeling of failure. Get ahead of it. It's a phone call. It's a consultation. It's advice.
Yeah.
And you can choose to do something with it or nothing, but be proactive. Don't wait till it's too late.
Yeah, I agree.
Great.
Listen, even the man that's the host of this show, I need help as well too. And I've reached out to people, and I'm going to probably reach out to you as well too,
Awesome.
Stefanie.
That's great. Yeah.
Right. So I was going to get my wife on board as well too.
Okay, of course.
Because
yes.
she's very analytical. She's like, I can do all this, and she got all these tax receipts all over the place, right? So I'm like, but you're burning yourself out. Let's go. Let's go travel now.
Exactly. What can you do with that time, right?
Exactly.
Yes.
So Stefanie, thank you for your time. I appreciate it. We'll do this again.
Awesome. Thank you.
All right. Take care.
Take care.